This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on June the 5th, 2015. Our time is 8:48 Mountain. Radio show runs on 6:30 CHED in Edmonton, 3 o'clock in the afternoon on Sunday. Ever miss a radio show? They are streaming live, archived at Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We also have a podcast. That podcast is through iTunes. Type in The World Financial Report on Radio. You'll find us there. Our show is portable. We go anywhere you do. Connect with Harold at rarecoloreddiamonds.com. Speak with him about investing in hard assets, diamonds, gold, and silver. 1-800-432-1022. 1-800-432-1022. Our featured diamond of the week is a 1.51 carat cushion cut, fancy, vivid, yellow, internally flawless. You can see it online, rarecoloreddiamonds.com, featured diamond of the week. Later in the show, we'll talk about another pop star who actually was engaged and got a yellow diamond a little later in the show. This week in the news, as we taped the show on Friday, the U.S. economy added 280,000 jobs in May. Although, as Harold and I always say, we just really have a hard time believing these numbers. The unemployment rate went up to 5.5% in the United States. 93 million Americans not in the workforce. 56 million women not in the workforce. 6.6 million working part-time, not by their choice. In Canada, we gained 59,000 jobs, and our unemployment rate was at 6.8%. Also this week, OPEC, they met. They refused to cut oil production. They continue to want to gain share over the rest of the world. In fact, some different members quietly came out and said a fair price for oil, $80. Yesterday, Greece missed their $300 million payment to the IMF, but got a new deadline to the end of the month. The IMF came out and said the United States should hold off on any rate hikes until at least next year. Christine Lagarde, head of the IMF, saying that it could cause a lot of problems for the world economies if the United States raises rates. Will Janet Yellen and the Fed listen? Time will tell. Mark Faber came out and said, forget about rate rises. QE4 is coming. Nouriel Roubini said, a market time bomb is raising the risk of a dramatic collapse in stocks due to liquidity. Also, Denmark continues to move towards a cashless society. The EU regulators told 11 countries to adopt bail-in rules. Similar to what happened in Cyprus, if your bank goes bankrupt, your money goes away to fund that bank. Also, the Bank of America coming out saying investors are suffering from Stockholm Syndrome, and the end game looks ugly for stocks. And Goldman Sachs came out and said, by almost every measure, stocks are overvalued. Get our free weekly newsletter from Harold at rarecoloreddiamonds.com. The companion to our radio show. You'll read everything that Harold and I are seeing on a weekly basis. You can go through it in 5 minutes or spend hours. Speak with Harold at 1-800-432-1022 about our free weekly newsletter. And a lot of stories this week, Harold, about people very concerned about the overvaluation of the stock market. In fact, Robert Shiller came out and said it's not just stocks, it's bonds, it's real estate. Everything seems to be overvalued right now. And if they do raise rates in the United States, I think we could see a dramatic drop in the stock market. But at some point, there could be a massive correction. And there are some top-flight investment minds out there that are very, very concerned about the stock market right now.
And they should be. Again, you're talking about a market that has nothing to do with the overall U.S. economy. And nobody believes the job numbers. The retail sales numbers are down. In actual fact, we could be going right back into a recession. So how in the world is the U.S. economy strong when all these situations are happening? But again, we know that the markets are manipulated, and they're still being manipulated as we speak. And, the way that I see things is that there's no need for them to raise interest rates here in the United States because the U.S. dollar is going to be the strongest currency, except for the British pound. So we know that the U.S. dollar is strengthening, and the reason it is strengthening is because so many other currencies are doing horribly. It's not that things are phenomenal in the United States. It means that things are bad in other areas. The euro is down to 108 to 110. It's trading in that range. The British pound, the euro, and the Swiss franc are the only currencies that are stronger than the U.S. dollar. In actual fact, my prediction is that the U.S. dollar is going to take off and run. So if you have any investments that are going to be made in the near future in U.S. dollars, I would suggest strongly that you start to convert at this point and really start to look at what's going to happen in the U.S. Canadian dollar, because what I see happening is that the U.S. dollar is going to continue to strengthen and break out very soon, and that's going to put a lot of pressure on the Canadian dollar and on the other currency markets. On top of that, because we believe that oil is going to go lower, as they just announced that Iran believes that the sanctions are going to be lifted against them, and they're going to be pumping 1 million barrels a day. Along with that, Iraq is going to be pumping 1 million barrels a day, along with what Saudi Arabia is doing, along with what the United States and Canada is doing. That tells me that they're going to put serious pressure on a market that already has an overabundance of oil. There is no shortage of oil at this point, so with Iran and Iraq both going to be pumping an extra 1 million barrels a day, look for the oil market to fall back, which will push the Canadian dollar back further. If you're going to make any investments in U.S. dollars, I would suggest you do it at this particular point, because the way that I see things is that right now we're up a full penny on the U.S. dollar. We're above 96 cents, almost at 97 cents. Now, once it breaks a dollar at par, I know this is difficult for some people to understand, but once it breaks par, which it's tried to do twice already and has come very close, I believe there are buy orders above the par level at U.S. dollar, which could push it up to 104 to 105 very, very quickly. If oil prices are going down and it pushes the Canadian dollar further, look for a massive spread between the Canadian and American dollar. Look for the Canadian dollar to possibly go to the 68 cent level, in my opinion, and if the U.S. dollar gets to 104, 105. So again, the currency markets are being greatly affected all over the world. We know that the euro, which at one point was at 170, is down to 108. We know what happened with the Swiss franc. 2 months ago, it went up 30% in 1 hour, and the euro dropped the equivalent amount within that same period of time. So the currency markets are concerning, but we also know that where there's a direct correlation between oil and the Canadian dollar, there's also a direct correlation between gold and the U.S. dollar. And the stronger the U.S. dollar gets, the weaker gold gets. So last week, we said watch the support level of gold at 1187. It held 1187 last Friday, but now we're down to 1161 this morning, where the gold market has dropped substantially. So we broke through a major support level in gold at 187. It hit 161. Right now it's trading at about 170, down 740 on the day. My feeling on gold is, and it has been for quite a while, is that short term we're going to see gold back off. The next level of support for gold is 1150, which is minor support, 1125, which is slightly stronger support, and then 1100. However, if the the U.S. dollar breaks par and starts to go to 101, 102, look for the selling of gold to speed up. And again, ultimately, if I'm right, which I believe I am, and gold goes to $1,000, that would be our very strong buying level. And the reason that gold would hit that level is strictly because of the U.S. dollar gaining strength. And that's what we see happening. We would see that the dollar would more than likely, the dollar, U.S. dollar, would basically top out at the 104, 105, possibly 106 level. And if that did happen, I would anticipate that the price of gold would be close to $1,000. At that point, we would more than likely want to be a major buyer of gold and silver at that time. Now, if gold does go to 1,000, anticipate that the price of silver could go to 1,250, and that's very possible. And it would not be a bearish situation if that did happen, because again, as much as they've manipulated the price of gold and silver since 2011, the fact is that the gold market and silver market will come back. It will come back to $50 in silver. It will come back to $1,920 in gold. And then when the situation is right, we will see a breakout in both of those markets that will take the price of gold and silver to levels that we've never, ever even dreamed possible before. And the reason that that's going to happen is that we are going to see major changes in currencies, but we are also going to see a flight to quality, which has always been in gold. There's also the fact that the production cost of gold is right at around $1,100. So if gold does go below $1,100, watch for major mines to shut down. They've been not doing too well over the last 3 years because gold's been trading in a range and has not been in the limelight. But if gold does go down to 1,000, that means that many of the major gold mines will close down. And it takes a while to get these mines going again. Already the price of silver is below production cost level. The production cost level for silver is at around $18. It's at $16.18. So a similar situation will happen in silver, where they'll stop producing because they're not going to produce silver and lose $2, $3, $4, $5 an ounce. They'll wait for the market to bottom, wait for buying to pick up, and then they'll start to produce again. But it could take 2 or 3 months for them to get back into production. And again, that could put us into a very strong position in gold and silver, because if there's a shortage when the buying starts, then it's only going to propel the market that much faster. I'm positive that the price of gold is not only going to break 1,900, which is the high that we saw back in 2011, but I believe we could see 4,000, 5,000, or possibly even higher. The fact is that the financial world is crazy. It's all screwed up. Nobody can figure out what's going on anywhere. Greece, postpones a 300 million euro payment, and they've got till next week. But where's the money coming from? They're going to have to borrow it again. Everything in Europe is tough. Things are not going well in the United States. The Canadian dollar is down substantially, and you're going to know this your first trip to the United States. Because the fact is that it's going to cost you $125 Canadian to buy $100 US. That's what I'm talking about. That's what the currency markets are like right now. It's a scary time. And the fact is that the markets are not doing what they should be doing because the government and the Federal Reserve has a different agenda. They think that the U.S. is the best game in town right now, and to an extent that's true. That's why the U.S. dollar is so strong. China's in big trouble. Europe's in big trouble. Believe me, Canada's not doing great either at this point. The Canadian dollar is weak, and the oil market is suspect. And, the fact is that with Saudi Arabia doing what they're doing in the oil market, it's possible that oil could come back down to the $35, $40 level again before it goes higher, and that, again, will push the Canadian dollar lower. So, again, my recommendation is, at this particular point, we need to be smart about things. You don't want to speculate. You don't want to leverage anything. You don't want to leverage metals. You don't want to leverage currencies. You don't want to leverage anything at this point, because these markets could all of a sudden turn very, very volatile. There's a lot of the top experts at this point that believe that the stock market here in the United States is getting ready to plummet. And we know from experience that when the market plummets, it can really plummet. What it could also do is set off the derivatives market, which is in the quadrillions of dollars. These are the most difficult and concerning financial times that we have ever seen. And my suggestion right now is that if you've got to do business in the United States, convert your Canadian dollars now, because a month or 2 months from now, you could see in a very slow time during the summer that the Canadian dollar could be 30 or 35% below the U.S. dollar, and that's substantial. The other thing that was concerning, and actually quite, I find it hard to believe when I read in the newsletter this week about Denmark probably being the first country to go to a cashless society. How in the world is that possible? I mean, how do you tip the valet when you get your car? I understand going into a restaurant, putting everything on your credit card and all that, but they're talking about bitcoins. They're talking about electronic money transfers. And you've got to look at a society like in the United States and Canada, in North America, where there's a large percentage of the population that doesn't own an iPhone, that doesn't own an iPad, that doesn't know how to transact things electronically. How in the world do those people get by? So I don't know how quickly we're going to be going to a cashless society, but when you do get the newsletter this week and you read that article, it is very, very positive on the fact that this is not only coming, it's already here, and it's only going to escalate. I personally find it an almost impossible situation to understand how it's going to work in the United States and Canada when so many people are poor, they don't have any money, they don't have any savings, and they don't have credit cards or debit cards. How in the world do they transact transactions? And again, something as simple as going to a restaurant or to a hotel, you park your car, you come back and you normally give the guy a couple bucks to bring your car. You're going to have to do that electronically now. So, again, get the newsletter this week. It's very, very important. It's important that Randy and I open up your eyes to what's coming. Whether you like it or not, whether you like the information we give you or not, or if you like what I'm saying or not, the fact is that it's very, very possible that what I've said today is going to happen. It's already happening. The currency markets are going to be very volatile. The Canadian dollar is definitely going to fall, and the U.S. dollar is definitely getting stronger over the short to medium term. So, again, please heed these warnings because, again, you're talking about substantial money. And percentage-wise, a 35% difference between the Canadian and American dollar, it was less than 2 years ago that the Canadian dollar was stronger than the U.S. dollar. That's how quickly your life can change, and that's what's happening in the financial markets as we speak.
This week's featured diamond from rarecoloreddiamonds.com is a 1.51 carat cushion cut, fancy, vivid, yellow, internally flawless. If you're interested in investing in this diamond to start your diamond portfolio or add to it, speak with Harold at rarecoloreddiamonds.com or call him 1-800-432-1022, and he'll be happy to put your name on the list for our free weekly newsletter. We send it out via email every week. But take a look at our featured diamond of the week from rarecoloreddiamonds.com, 1.51 carat cushion cut, fancy, vivid, yellow, internally flawless. We know that singer Nicki Minaj, she was engaged about a month ago and was given a yellow diamond. Another pop star has been given a diamond, and it's an engagement ring. We'll talk about it a little later in the show. Richard Russell has been writing, I was reading this week, the Dow Theory Letters for 57 years. He's in his 90s, and he had a commentary this week that we want to pass on to you. He said, I read dozens of newsletters and market theories, and almost all of them are scratching their heads as they attempt to call a top in this stock bull market. Today, many people are asking if there is a bubble, and if so, where is it? My answer is that the bubble is in the production of fiat currency, and I keep one proverb in mind. No tree grows to the sky. I've never seen a top formed when so many advisors are searching for a top. I've been thinking about this market night after night, and my conclusion is that it's fruitless to try and call a final top. It comes down to a matter of philosophy. Why try to do the impossible? Method after method has attempted to call a top, but so far, nothing has worked. The stock market continues to confound serious and seasoned investors. History is being made as investors tear their hair out while attempting to position themselves in this strange environment. My conclusion is that if nothing works, stop trying. My advice is to be out of the stock market and take a position in pure historical wealth, which means a position in physical silver and gold. If you don't know what the market is telling you, don't act as if you do know. Step aside and watch the show. History is being made. The best we can do is avoid major losses. So take a step back and enjoy a period unlike any that has ever occurred before. We have the full story in our newsletter. You can get our free weekly newsletter from Harold. Connect with him at rarecoloreddiamonds.com or call 1-800-432-1022. And Harold, I really think there has never been better advice in the times that we live in than what we just heard from Richard Russell, who's in his 90s, been writing the Dow Theory letters now for 57 years. Don't try and pick a top. Don't try and outsmart yourself, because more than likely when this market starts to go, it will go very, very quickly and catch a lot of people by surprise. We have about 2 minutes left in our segment here.
You bet. Again, first of all, to be that sharp in his 90s is really, really great. And I read him, and I've known of him for a long, long time. So, again, bless his heart, I hope he continues to be well and sharp and healthy. But he's right. You know, the fact is that you can never pick a top and you can never pick a bottom. You pick a level to where you think you're getting fair value, and that's what you do. But unfortunately, you know, with the general public, they buy into frenzies, they buy into fast-moving markets because everybody wants to make, you know, quick and easy money. There is no quick and easy money, because these markets can turn on a dime, and before you know it, you know, the market's down and you're down your money, and, you know, and then you're fighting to get it back, and then it becomes an emotional situation for you. You never buy at a top when the markets are this dangerous. The fact is that some people will short the market. That's not something that we do. We just wait for value, we wait for the right opportunity, and then we buy. We're not trading gold and silver. We've always said that. We buy it for a particular reason, and the reason is currency devaluation, inflation, and just a flight to quality, and all those are in play right now.
This week's featured diamond from rarecoloreddiamonds.com is a 1.51 carat cushion cut, fancy, vivid, yellow, internally flawless. See it at rarecoloreddiamonds.com, featured diamond of the week. Bill Fleckenstein had a great quote this week, and you can find it in our newsletter. He said, "There is now the third bubble," and he's talking about the stock market, "that has been spawned by the Fed as it pursues policies to address the consequences of prior poor policies. After the next crisis, we can only hope that sanity may break out. But since we're 0 for 2 so far, we have to be alert to the possibilities that the Fed will turn around and do the exact same thing all over again. How long markets let it get away with these disastrous policy agendas will have a huge impact on the net worth of everyone on the planet." Get our free weekly newsletter from Harold. Connect with him at rarecoloreddiamonds.com. Take a look at our featured diamond of the week. Click on Featured Diamond of the Week when you go to rarecoloreddiamonds.com. It's a 1.51 carat cushion cut, fancy, vivid, yellow, internally flawless. And it would be great to start a diamond portfolio with or add to a diamond portfolio today. Speak personally and privately with Harold at 1-800-432-1022. As well, go to rarecoloreddiamonds.com. There was a sale in Hong Kong. Christie's had a sale. We'll talk about it, as well tell you who got engaged and got a yellow diamond ring. As the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on June the 5th, 2015. Our time is 9:14 Mountain. Radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3. If you ever miss a radio show, don't forget, we have 2 ways you can connect with us. Via podcast. We have a podcast on iTunes. Type in the World Financial Report on Radio. You'll find us there. And we have the show streaming archived on Harold's 2 websites. You can listen at your leisure anytime. HESradio.com, rarecoloreddiamonds.com. I know a lot of times I'll listen to the radio show as I'm at home or driving around, and sometimes I'll go back and catch some things that I might have missed as I get in and out of the car by listening on Harold's 2 websites. And, of course, we are portable via iTunes and the podcast. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. Harold's auction site is hsfineauctions.com. Our featured diamond of the week is a 1.51 carat cushion cut, fancy, vivid, yellow, internally flawless. This is just a stunning diamond. You can see it at rarecoloreddiamonds.com, rarecoloreddiamonds.com. Well, first it was Nicki Minaj being engaged and getting a heart-shaped yellow diamond. And during the week, Iggy Azalea, a pop star, showed off a $500,000 engagement ring from Nick Young. And the singer and the basketball player were engaged on Young's 30th birthday, and she picked up a 10.43 carat engagement ring from a Beverly Hills firm. The ring features an 8.15 carat fancy intense yellow cushion cut center stone with 2.28 carats of white diamonds set in 18 karat gold, white gold. The value on it, they're saying $500,000. And if you'd like to see a picture of the diamond ring, we have it in our free weekly newsletter. You can check it out there. And in past newsletters, we had a picture of the ring that Nicki Minaj got. Both rings, Harold, it's sort of funny because a long time ago, you were the one who really was saying, invest in yellow diamonds. Invest in yellow diamonds. You kept repeating it over and over again because you saw incredible value there. And now we're seeing these major stars coming out. And pinks, we have obviously immense, obviously love and belief in pink diamonds, but we're seeing these yellow diamonds go as engagement rings to some very top-flight people.
You bet. Big yellow diamonds are very, very, very hard to get. I know that my wife has a 14-karat flawless yellow, and it's tripled in price in the past 6 years. You cannot get those big, expensive, beautiful diamonds anymore. They're just not coming out of the ground. So, again, just a phenomenal investment. Only one diamond in 15 million is over 2 carats. So that'll tell you how rare it is to find, a large diamond today. So a 10-karat fancy intense yellow diamond is certainly a beautiful diamond. I'm sure the ring is spectacular. But understand, if you're buying it in Beverly Hills, you're paying top retail for it. But I'm sure it's a gorgeous diamond. They don't buy those as investments, but the longer you hold on to them, they never ever decline in value because you could never replace a diamond like that. So again, to get into a big yellow diamond, it's a phenomenal investment. The diamond that we're featuring this week is a sensational diamond for several reasons. Number one, it's over a carat. It's a carat and a half. Number two, it's the best color that you can get. Vivid has got the highest saturation of color, and what really influences the price of a diamond primarily is how much saturation of color, and Vivid is the strongest of all. This is a very, very strong Vivid. On a scale from 1 to 10, I would rank it a 9. On top of that, there's all these different clarities. You go from internally flawless, which is the very best, down to I1s, which you can see the flaws. This is internally flawless. So again, to be able to buy a diamond like this, it's extremely rare. You would have to go to New York to one of the top jewelers to get a diamond like this. And believe me, if you went into a high-end jeweler's like Harry Winston or Graf's or Tiffany or any of those, a diamond like this, you would pay 2 or 3 times what you would be able to buy it from me. We're an investment firm. We're not jewelers, even though we can and do put diamonds into magnificent museum-quality pieces of jewelry. The most important thing is the actual stone. And this particular stone is sensational. It's an asset that will go up by 15 to 20% a year. And the only thing that will affect it on the higher basis is inflation and that type of thing. Because there's so few of them, they never ever go down in value. And because we spend most of the show talking about the currency markets and how important currencies are, diamonds like this, rare color diamonds, are one of the most important investments you could make because they could be sold in other currencies. In fact, they're one of the only assets in the world that can be sold in another currency. And with our business, because we own our own auction business, we can hold virtual auctions all over the world. And if the British pound is the strongest currency, we would be more apt to sell our diamonds in England to be able to get the currency value for our clients. However, many of my Canadian clients have been buying diamonds from me for many, many years now. In fact, most of my clients have bought diamonds when the Canadian dollar was stronger than the U.S. dollar. So to give you an indication, if you bought a diamond from us or bought a diamond when the Canadian dollar and American dollar were even, let's say, for example, you spent $100,000 U.S. on that diamond when it was even with the Canadian dollar. Do you realize without any appreciation on the diamond whatsoever, just on the currency difference, that diamond is now worth $125,000. You made $25,000 or 25% return on your money just on the currency alone, let alone what that diamond would have gone up over the last 3, 4, 5 years. That's why this is such an important investment. When you look at other assets that are priced in other currencies, you can see that other currencies can go down. Again, I'm Canadian, so in no way, shape, or form am I bad-mouthing the Canadian dollar, Canadian economy. I would never do that. My biggest love is Canada. Everything about Canada I love. I'm still the biggest Toronto Blue Jays and Toronto Maple Leafs fan. So, again, this is only about business. This is about currency devaluation and what I've been talking to all of you about for such a long period of time, how a currency can change so quickly that it could change your entire portfolio. That's why it's important not to have all your money in one basket, not to have everything just sitting in one currency market, whereas a diamond could be sold in British pounds, in euros, in Japanese yens, in Swiss francs, in Canadian or American dollars. It gives us that flexibility. And again, you're talking about an asset that is so rare that it never ever declines in value. You couldn't go out and find another cushion cut, fancy, vivid, yellow, flawless that easy, especially one from South Africa like this one that is such a strong color saturation. So, we love yellow flawless diamonds, whether they're fancy yellows, fancy intense yellows, or fancy vivid yellows. They go up more in price due to the saturation of color. But then we have another phenomenal opportunity. It's in pink diamonds. The Argyle mine in Western Australia produces most of the pink diamonds in the world. It's a very, very small number. It's about 200 carats a year, which barely will fill a champagne glass. Why is that important? Because the Argyle mine that produces these treasures, known as the most concentrated form of wealth on earth, Argyle pink diamonds, they are going to come to an end within less than 5 years. The mine that produces most of them, the Argyle mine that produces 95% of all the pink diamonds in the world, is getting ready to close down. Rio Tinto, who owns the mine, just says it's not producing anymore. And believe me, the Argyle mine, which is famous for its pink diamonds, produces, again, only about 200 carats a year, which is 95%. The rest of the diamonds that come out of the Argyle mine are white industrial diamonds primarily. They're not investment quality whites. They're industrial whites that are used to cut other diamonds. So really, the mine, which was actually discovered in 1986, produces 30 million carats of diamonds a year, but only 200 carats are these Argyle pinks. And not all of them are investment quality. So you're talking about a very, very tiny percentage. A tiny percentage of that mine produces these amazing pink diamonds that are a true mystery. Nobody knows what turns a diamond pink. They believe it's the inclusions in a diamond. That's why very, very seldom will you ever see a flawless pink diamond. We know that boron will turn a diamond blue. We know that nitrogen will turn a diamond yellow or orange, and we know that uranium, radioactive actually, will turn a diamond green. But nobody knows what turns a diamond pink or red. And that's what makes those diamonds so valuable. Do you realize that there are pink diamonds right now, vivid pink diamonds, that are so rare that they could sell upwards of $3 million a carat, and the only diamond that I know of that even comes close to that are red diamonds. So, again, at this particular point, the currency markets play a big role in what's happening in the diamond market. And I know that my Canadian clients are a little bit at a disadvantage right now because of the difference in currency between the Canadian and American dollar. However, it's extremely important to understand that diamonds are one of the most important investments you could make at this time because there's so much fear. There's so much speculation. There's so much uncertainty in all of the markets that nobody knows exactly what's going to happen. But we do know that these markets are suspect and they are about to fall. Everybody knows that the stock market is basically rigged at this point, and there's no way possible that that market is not going to fall again. And when it does fall, and we could go into a recession in this next quarter, you're going to find that all hell is going to break loose in the marketplace. You need to have something that is safe, something put away for your future that you don't need the money for right now. You don't buy a diamond and trade it in 4 or 5 years. It doesn't do you any good. It's one of the most important assets you could ever hold on to because, again, the longer you hold it, the more and more valuable it becomes. I've got friends, and I could tell you countless stories of people that have held on to diamonds, for generations, to hand down from generation to generation, and the returns are astronomical. I could certainly show you that a 14-karat flawless yellow diamond that I bought, 5 or 6 years ago for $250,000 is now worth upwards of $800,000. A pink diamond that was 5 carats 50 years ago was $50,000. Today it's $5 million. So don't cut yourself short. Don't buy a diamond and look to sell it in a short period of time. Hold on to it for the longer term. Hold on for your retirement. Hold on for your kids. If you don't need the money, pass it down in your will to your children and grandchildren. That's where they're going to see gigantic returns. Again, it's not a short-term investment. It's not an investment you buy today and look to sell over the short term. I'll dissuade you from doing that because you just won't make money on that. You want to hold it for the long term, and you want to hold it for safety because with what's happening in currencies, and we also know, because it came out in the newsletter a couple of weeks ago, that many of the biggest banks have been fined billions of dollars because they've actually been playing with the currency markets. So they've been manipulating currencies, and you see it all over the world right now. You see the euro, see the Swiss franc, you see the Canadian American dollars. You see what's happening in all of these currencies and realizing that the banks made this happen. And because the banks are way bigger than us, we're just small investors, what chance do we have? So do we follow everybody and do we buy stocks like the banks? No, we don't buy those because the fact is the prices are way too high. It's way too risky. In 1999, 2000, we saw the markets fall apart. We saw it again, in 2007 and 8 where it fell by 50%. And we're going to see the same thing again. Those are not the right type of markets for us. Those are not the areas that we put our money because you're going to end up losing everything. And if you're in your 60s or 70s and you're still in the stock market, when we get this next fall, you will never make that money back again. Take some of that money that's at risk and put it into a safe asset. And the longer you hold it, the more it's going to go up. We have a virtual auction. We've made tremendous improvements to our auction business, and we are going to come back into the fall and have some amazing auctions. I've got some phenomenal collectibles put away. I've got Saddam Hussein playing cards from way back in the day when all of his henchmen were around. I've got things that are so valuable and so much fun. So in the fall, when I get back from Colorado, we're going to have a fun auction. We're going to auction off some coin sets, some cards, some diamonds, some amazing things. And at this particular point, that's what we need to do. We have to use our money for things that are going to make us money in the future, but are not risky and volatile. So again, between yellow flawless diamonds and argyle pinks and the blue diamond market going up 1,000% in the last 10 years, that's where your money should be. Put some of your money into a safe investment that is not affected in a negative way by the currency markets. You're going to find that diamonds are going to help you sleep at night because they're not traded on exchanges and they don't get those downward pressure that all other investments get. So again, Randy, what we're seeing at auction and what we're seeing happening in the diamond world right now is almost unprecedented. Prices are skyrocketing and will continue to do so as one of the only safe assets left in the world today.
There was a Hermes Birkin handbag this week that sold for $223,000 in Hong Kong.
And a bottle of wine that sold for $18,000. So
that may be undrinkable. That's the kicker is it may be undrinkable.
Exactly. So the fact is, if this is happening, and then when you see the results from some of the auctions and private sales, and fortunately my company has seen some very, very large private sales lately, you'll understand that this is where smart money is going to. Just take some of your money and put it into a diamond which is safe. If people are paying $18,000 for an undrinkable bottle of wine, if somebody's spending that kind of money on collectible pieces, do you know that there's a Ferrari that's sold in California at Pebble Beach 2 years ago for $16 million? Now it's back up for $25 million and is going to sell. That's a return of $9 million in 2 years on an investment, and it's not a stock, and it's not a commodity, and it's not a currency, and it's what it is. It's an alternative investment, and that's what I've been recommending to you for the last 10 years. Alternative investments that will end up making you more money than any of these markets that you're trading in, because we don't want to trade, we want to buy and hold, and that's why this is so important. $18,000 for an undrinkable bottle of wine. If that doesn't tell you what's happening in the world today and why these type of assets are so important, that's where people are comfortable putting their money. And I can pretty well guarantee you that bottle of wine will sell again for $25,000, $30,000 down the road. And that's the same thing in diamonds, by the way. If you sell a diamond, an important diamond, you will never, ever buy that diamond back for less than what you paid for it. It's always for way, way more. So, again, this is a good time for us. We're conservative here. We're not risk takers. We don't tell you to finance anything or don't finance your metals or don't leverage anything like that. We're conservative. Say buy everything outright. Stay within your comfort level. Don't get outside of your comfort level, and don't speculate and risk your money, because you'll never make it back in the marketplaces. It's alternative assets that will make you back that money.
Guess it was about 3 weeks to a month ago on our show, we talked about a watch that sold for $5 million, also a Picasso painting, $149 million. In fact, there were 8 different pieces that sold at auction in New York City, art, close to $1 billion. Hard assets, as Richard Russell and Harold have educated us over the past 10 years, that's the place to be. That's where people are putting their money. Buy things that governments cannot print. They can print money or even come up, if we go to a cashless society, they'll just create digital currency out of nowhere. Lord knows who will keep track of it. Buy things that they can't print. This week's diamond is a 1.51 carat cushion-cut, fancy, vivid, yellow, internally flawless. When we talk about these featured diamonds on a weekly basis, we're highlighting something that we really think would be an addition to your portfolio or a great diamond portfolio starter. And this would be the perfect diamond for you. As we talked about Iggy Azalea and Nicki Minaj getting engaged here in the last 4 months, and both getting yellow diamonds as engagement rings. 1.51 carat cushion-cut, fancy, vivid, yellow, internally flawless. Speak with Harold about investing in this diamond, rarecoloreddiamonds.com or 1-800-432-1022. Christie's Hong Kong Magnificent Jewel Sale took place on June the 2nd in Hong Kong, China. And there were some pretty big heavy hitters that went early on. Lot 2104. A superb colored diamond and diamond ring set with a rectangular-shaped, fancy, intense pink diamond, weighing approximately 9 carats. It went for $12 million. There was a lot 2105A, an exceptional colored diamond ring by Mosieff, and it was a rectangular, fancy, intense green diamond weighing 5 carats, and it went for $2.7 million. There was lot 2105, a rare colored diamond ring, also by Mosieff, set with a pear-shaped fancy intense blue diamond weighing approximately 3 carats, with a brilliant pink diamond frame and heart-shaped pink diamond surround. It went for $2.2 million. And if you'd like to get these auction results, we will be happy to send them out to you free of charge. Connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. Also, lot 2081, a colored diamond and diamond ring set with a brilliant cut, fancy, vivid yellow diamond weighing 3.12 carats. Now, the estimate on it was $194,000. sold for $331.8. And also, we had a lot 1959, a colored diamond and diamond ring set with a rectangular-shaped fancy intense yellow diamond weighing 12.73 carats. The estimate on it, $155,000, sold for $316.2. Lot 1869, a colored diamond and diamond ring set with a rectangular-shaped yellow diamond weighing 11.38 carats. The estimate on it, $51,000. It sold, Harold, for $238,481. And lot 1961, a colored diamond and diamond pendant necklace set with a pear-shaped fancy brown-yellow diamond weighing 15.18 carats, and it was suspended from a series of marquee-cut brown diamonds. The estimate on it, $45,000. It went for $81,000. If you would like to see these auction results, connect with Harold at rarecoloreddiamonds.com or call him at 1-800-432-1022. And Harold, obviously, we had some very good auction results out of Hong Kong, and that's what we really are seeing all around the world. When colored diamonds are being auctioned off, they do exceptionally well.
You better believe it. And again, it's only going to get better and better and better, especially when the markets start to fall. You know, all the smart money comes out first, and then it's the general public that ends up losing. So the people that are in the know, the Wall Street people, the ones that are holding everything, they're the ones that are liquidating now. Who are they selling to? They're selling to the general public that thinks that the market's going higher. So again, that doesn't happen in diamonds. It doesn't happen in alternative investments. You don't see those type of situations happen. You get what you want. You do your homework on it. You buy the best you can possibly get. And the fact is that some of these turn out to be unbelievable returns. Again, a $16 million Ferrari 2 years later for $25 million. That's what I'm talking about. We're talking about diamonds that go up, no matter what the economy is doing, and do even better when the economy gets the way it is right now. So again, I'm very pleased at this point, Randy. I don't have any money in the stock market at all. I put no money at risk whatsoever. I have nothing leveraged in my portfolio at all. I buy everything outright, and I don't trade precious metals. I buy and hold it because there is going to be a time in the very near future that these markets are going to react to certain situations, and then we'll look to get out of our positions. But that's going to be probably 3, 4, 5 times what the price is right now.
Speak with Harold about investing in hard assets, diamonds, gold, silver. 1-800-432-1022. Connect with him at rarecoloreddiamonds.com. And one of the main focuses of the show and the newsletter is talking about today overvaluation in the stock market. And that was really one of the overriding themes that we saw this week in the news flow. And you can get our free weekly newsletter from Harold. Connect with him at rarecoloreddiamonds.com or call 1-800-432-1022. And really, just a damning story you must read came out. Bank of America, investors are suffering from Stockholm Syndrome, and the end game looks ugly. The bank's European equity strategy has put out a note saying investors are facing a lose-lose situation by piling into stocks. Harold, just a stunning statement from the Bank of America saying that people are suffering from Stockholm Syndrome. We've got about 30 seconds left here.
Well, they would know because they own Merrill Lynch. So, again, I wouldn't put a penny into the stock market right now. It does not reflect what the U.S. economy is doing. I'm a Canadian living in the United States. I've been in the investment business 35 years. And, again, I don't trust anything that's happening here right now. Everything is manipulated.
Thank you very much, Harold Siegel.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
And we congratulate Iggy Azalea, the pop star, for getting engaged this week. She received a yellow diamond, just a stunning diamond. You can see it in our free weekly newsletter, worth approximately $500,000. Even better, go take a look at an investment diamond that you can have in your portfolio. That is a rarecoloreddiamonds.com diamond, 1.51 carat cushion cut, fancy, vivid, yellow, internally flawless, Take a look at it at rarecoloreddiamonds.com. Speak with Harold about it on Monday. Call him immediately, 1-800-432-1022. It will go very quickly. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.